Hello traders, and good afternoon, and welcome to this video analysis of today's markets. So traders, firstly just going to run over our open positions, what we're seeing in the market, and then we'll also touch on some other trading opportunities I'm looking at potentially today. So traders, if we're still holding the dollar against the Swiss franc, we're really strong now, over 413 pips profit. I'm waiting for this currency pair to punch above 10100, then I'm going to add another position. We must remember traders, the dollar is very strong long term because the US central bank is forecast to raise interest rates another 5 times in the next 15 months, and this will continue to boost the dollar's demand in the market because the difference in interest rates between the US central bank and the Swiss central bank makes the dollar more attractive to buy against the Swiss franc, because you receive a greater interest rate credit into your account because of the difference in interest rates. So that's a dollar against the Swiss franc traders, which are very strong in profit. Looking at the USD JPY currency pair traders, we are currently, I think it's 200 pips profit for this trade, which is really good. Going to be holding this trade again. Traders, if you look at the dollar's long-term bullish trend in the markets, very strong for the dollar, continues to climb higher, and as the Fed continues to raise interest rates, the dollar continues to strengthen, and it's the same situation as the Swiss franc traders. The difference in interest rates between the two currencies is making the dollar an attractive investment against the Japanese yen because of the interest rate credit you get into your account holding this trade, and also capital appreciation in the long-term trend for the dollar. So that's very good, traders. We have had, of course, pullbacks in the euro for our position against the Japanese yen. Now again, traders, we understand what's happening with the euro. We have the Italian government budget deficit, could call it a crisis, with the standoff between the Italian government and the EU. Basically the EU threatening to basically slap sanctions and penalties on Italy for raising a budget that is so high in debt and kind of breaking their rules. And then the markets are very nervous about how is this going to feed into the Italians' hands. Are they going to try to push for an EU referendum on their membership because they feel like they can't stimulate their economy in the ways they want to without being bind to the EU's rules and regulations? And of course, this is weakening the currency. But then on the other hand, traders, we have to remember that the ECB is scheduled to end quantitative easing next month and then raise interest rates in the summer of 2019. And if they follow through with this plan, the euro is forecast to get really strong in the markets. Now, this Italian budget issue is the only thing weighing the euro down at the moment. So we have to keep that in mind, and I'm going to keep my long position open for this currency pair. Pullbacks are expected, but we must remember no one's buying the Japanese yen long term because there's no interest rate hikes expected in Japan for another 2 or 3 years because their low inflation is nowhere near their target, and they're going to continue with their quantitative easing bond purchasing program to try to continue to stimulate the economy by pumping billions and billions of Japanese yen into the economy to get spending going, get inflation up to the 2% target. And until that happens, no one's buying the currency because, of course, the excess supply of money weakens its value in the market because there's more of a supply than there is demand for the currency. So moving out of the Japanese yen, traders, we're looking at we also have our positions for the Canadian dollar. Let's move on to the Australian dollar versus the JPY. Pullbacks again seen through safe haven demand into the yen, but again, long-term trend should be strong based on the expectations that the Chinese president is meeting Donald Trump for trade talks, and that could strengthen the demand in the currency, which has been very weak in 2018 as an Australian dollar because the ongoing US-China trade war already threatens to damage their economy because they are such an export-driven economy reliant on strong Chinese performance in their economy to meet the demand for their export. So we understand why it's been weak, but we have seen it climb higher, and hopefully Trump and the Chinese president can reach some formal agreement or framework for agreement to stop the trade tensions, stop the tariffs, and that will give markets confidence and boost the Australian dollar. So holding this position as well, traders. Then we have the Canadian dollar, which I've already given an analysis on. We know Canada is an export-driven economy for oil. Oil is their main export, and if we look at the price of oil, it's tumbled by over 20% in the last 5 weeks because of the oversupply of oil from Saudi Arabia and Russia. But There has been news today that they're saying that they want to cut production to get oil prices to rise again. And we must remember, if oil prices rise, traders, the value of the Canadian dollar will increase, simply because Canada's main export is oil. So when oil production is reduced and the demand for oil is still very strong, the price of oil rises. So that means more dollars come into Australia from the sale of their exported oil, and that raises the value of the currency because it is in such high demand in the market. More importantly, for the Canadian dollar traders, we must remember the Bank of Canada is saying they're going to continue to raise interest rates. They need to, because the economy is very strong. And this is the only reason, traders, why we've seen the Canadian dollar not be so bullish, similar to what we've been seeing for the US dollar, even though we know interest rate hikes are coming. And the only reason why, as I just explained, is because the price of oil has been so low. It's weakened the demand for the Canadian dollar, their main export. And this is why this currency is not as bullish as we would expect. But I'm holding this trade long term because the fundamentals are still bullish for the Canadian dollar. And the same thing for the Japanese yen traders as well, CAD position, holding, being patient, and then waiting for the rise in value, which will happen sooner or later. It's just a matter of time until oil prices start to creep higher in the market. So just looking at the pound again, Brexit headlines come out today that Theresa May has to abandon her Brexit position because it compromises the Northern Ireland being outside of the UK, even though they are a British territory, which is something the DUP party does not want. I remember the DUP party props up Theresa May's minority government, and this can obviously basically mean that they can vote down her Brexit deal and it won't get through Parliament, and that either makes the UK leave the EU without a deal, or maybe a second referendum, which could be a good thing. But this is why we're seeing the pound weaker. Now let's look at the pound's price action in recent weeks. It just goes up, down, sideways. Brexit news keeps coming out. We don't know where it's going to go. Is there going to be a deal reached? But until that situation is made clear, we've got to be very cautious around how we trade the pound. I want to be buying the pound because, as I said to you traders, the pound is so undervalued right now in the markets. If we look to where the pound should be trading compared to where it was before the Brexit referendum, the pound still has about 10 to 15% to climb across the markets in value, which means that it's really undervalued and there's a lot of room for it to climb in the markets and some perfect trading opportunities if a Brexit deal can be reached. So against the yen has to climb back up 10%, traders, back up to 162 where it was trading before the EU referendum. And we must remember the pound's only trading at these lower levels, not because the UK economy is performing badly, it's actually performing very well, but the uncertainty around how the UK trade with their main trading partner, which is the EU, after they leave the European Union on March 29th, 2019. We must remember the UK exports 44% of all of their exports to Europe. So of course, a no deal Brexit, tariffs on UK goods going to the EU will obviously damage the UK economy, which is why the pound's been sold off. And against the dollar traders, again, I want to be buying the pound against the dollar, even though the dollar's raising interest rates, because the simple fact that the pound is undervalued to where it originally would be trading if this Brexit situation hadn't played out. And we still have currently nearly 15% to go back up to 144, 150 to where it was trading previously. So keeping my eyes and ears firmly on the news, traders. Let's see how this progresses. Let's see what happens. But again, I do want to be buying the pound as long as some positive headlines can come out for Brexit in the market. Now traders, another one to look at would be Aussie dollar versus the US dollar and the New Zealand dollar versus the US dollar, and not just against the US dollar, but these two currencies across the markets. Look how weak the Australian dollar has been in 2018, especially against the dollar. Of course, you know, interest rates are going up, but even against other currencies where the interest rates are not going up, the Australian dollar has been so weak, and it's exactly the same situation for the New Zealand dollar. And it's simple, traders. Australia and New Zealand export such a large majority of their exports to China, and US sanctions on China, tariffs on China at the moment, because Trump's trying to get a better trade deal, has already slowed down the Chinese economy, because less money comes into China for their exports to the US, because Trump's put this tariff on their exports, which makes it more expensive for US consumers. As less money comes into China, companies are not making as much money, households are not making as much money, then that means obviously the demand for exports from Australia is reduced, and then of course Australia's economy is heavily hit by the reduction of their export sales to China, and this is why the currency is weaker in the markets. And it's exactly the same for New Zealand and Australia. They're in the same position. So if Trump and Xi Jinping can reach some sort of agreement at their meeting this month, Of course, this selling that's been priced in to the Australian dollar and the New Zealand dollar can be unsold, and then we can see the currencies rise in value. But if talks between Trump and the Chinese president don't reach any agreement, then we can just expect further selling in these currencies, and that's the opportunity I'm looking to take and buy the dollar back against these two currencies. Or if there is a deal reached, traders, we can buy the Australian dollar and the New Zealand dollar back in the markets. Hope that makes sense, traders. Any questions, please shoot me a message and I'll be happy to answer any of your questions. Thank you so much.